What are the practical daily habits that investors can inculcate so that they can manage uncertainty and control their emotions?
Don't be greedy. It's very easy to say, but many a times you just are unable to not follow the herd when everyone around you is getting greedy.
Especially when everyone is making money and you are not making money.
A lot of noise coming from TV channels, from so-called experts, from influencers. Many professionals, although doing very well in their professional life, their personal finances are ignored.
Seek help from a professional advisor as and when it is required. Welcome back to another episode of Truemoney Talks. We will be continuing our discussion on managing uncertainty in stock market world. This is part 2. In our part 1, we discussed exclusively on a quantitative framework, that is the asset allocation framework. In today's episode, we will be touching more upon the qualitative aspects side. Let's get started. I have with me Sumit here. Hi, Sumit.
Hi, Shivani.
So Sumit, let's start with probably talking about, discipline. Markets, they go up and down, but people who can show discipline, they tend to do better. Why do you think discipline is the underrated investment skill?
Very rightly said, Shivani. A non-disciplined approach towards investment would not lead to returns on a continuous basis in the long term. Discipline is a bedrock for financial success. Discipline has to be with respect to asset allocation, so that you follow the asset allocation at different times in the market. Discipline has to be with respect to making investments on a regular basis. And discipline has to be with respect to managing your emotions. Having this discipline will only ensure that you are successful financially in the long term. That skill is something which is very much needed. And as you know, a very few people are able to apply discipline in their lives, and that also to their investment.
Moving on, some time back, I attended a session which was on meditation for investment professionals. And the outcomes were eye-opening. And I know that you are into meditation as well. How does meditation help an investor in keeping their emotions like greed and fear in check so that they can tackle the uncertainties in a better way?
So as I said, asset allocation, sticking to asset allocation is important. Not being driven by greed and fear is important. But it's very easy said than done. Saying that don't be greedy, it's very easy to say. But many a times you just are unable to not follow the herd when everyone around you is getting greedy. You feel that comfort in the crowd. And you also tend to become greedy.
Especially when everyone is making money and
Yes.
you are not making money.
Exactly. I mean, there have been times when you are envy of your neighbor who probably you think knows nothing about investment and making a lot of money. That is the time you become greedy and you do not stick to your asset allocation. So ideally, when the markets are getting very expensive, you should be reducing equity. You should have that discipline to reduce equity. And on the other hand, when the markets have crashed and everyone is fearful and panicky and it's like end of the world, you should have courage to add to equity as per your asset allocation plan. That is something which is, again, as I said, easy said than done. So how do you ensure that you do not get influenced by greed and fear and the psychology, forces of psychology around you, which is coming from the herd behavior? The only way to do it, to have a calm mind. To achieve that calm mind, meditation helps a lot. So I've been practicing meditation for about 16 years now, and I see a lot of benefits from it to not just manage a portfolio in a disciplined way, but also manage my other aspects of life. Meditation helps bring clarity of thoughts. It helps you stay calm when everyone else is going crazy. It helps you take logical decisions, which eventually will help you generate higher returns from your portfolio in the long term.
Sumit, what else can be done here?
I think one needs to avoid noise. A lot of noise coming from TV channels, from so-called experts, from
Lots of it.
influencers. You have a lot of noise anywhere. I mean, this world is such that the sources of communication has gone up. The
And they are free of cost.
They're free of cost, and the information is available and spreads very fast everywhere. And it's very important to understand, to be able to differentiate a signal from the noise.
Yeah.
There's so much noise around us, and we get influenced by such Noise is because maybe someone is shouting from the rooftop and telling something, and we feel that, okay, maybe this is important. But a lot of times, a lot of noise needed to be ignored because it's not important for your portfolio decision making. That's why one should have a calm mind, should have clear thoughts to be able to differentiate signal from noise.
In this whole discussion of managing uncertainty, managing emotions, when does it make sense to seek advice from a financial advisor?
See, if you think it's very difficult to be disciplined, if you do not have time, if you do not have skill set to manage your own portfolio, and you do not have behavioral control on your emotions, so hiring an advisor would do a great value add to your overall investment portfolio.
Why are then people hesitant in seeking advice from a professional financial advisor?
What we have observed is that finding the right advisor is very difficult. People don't trust. When they don't trust, they sometimes tend to make their own investment decisions, and sometimes they don't have time to make such investment decisions. That's why many professionals, although doing very well in their professional life, their personal finances are ignored and severely impacted. If their professional plus personal portfolio have been doing good, then the chances of achieving financial freedom are much higher. So now, as I said, it's to finding a reliable investment advisor is not that easy.
So, what are the qualities one should look at?
Thankfully, SEBI introduced a category called Registered Investment Advisor in 2013, according to which an investment advisor cannot earn from commissions any direct or indirect benefit from the product companies for which he or she is recommending. The only source of revenue is the fees received directly from the clients. That aligns the client interest with the advisor. So that is very important aspect. Finding a fee-only investment advisor who is having an interest aligned with yours and has no conflict of interest. Because if you are engaged in a commission-based advisory model, then high chances are that an advisor would be inclined to recommend investment which are offering higher commissions. That is one. Second, investment advisor should have empathy, should be able to understand you and your situation and what objectives you have in life. So that empathy is very important. Third, your investment advisor should have relevant experience and knowledge. Experience of understanding how different market cycles behave, how people behave in different market cycles, what investment works at what stage of the market cycle, having understanding of historical cycles in the market, and how to design the portfolio to take advantage of market cycle is also very important. So having a very clear-cut investment philosophy of an investment advisor is needed. So you should always try to understand what is the investment philosophy of your advisor and how they navigate the portfolio through different stages of the market cycle. Then the last aspect, as I said, to be able to understand behavioral aspect. The role of an investment advisor is also to manage your emotions. Don't let you get greedy when everyone else is getting greedy. To be able to tell you no to a lot of wrong investment ideas. To be able to give you courage to invest when everyone is panicking and exiting from equity, when the prices are very cheap. So the role of investment advisor should be such that he or she should be able to manage their own emotions and also help you manage your emotions. Another aspect I would want to add, an investment advisor should also be able to understand the macroeconomy, because we are in a very connected world. What happens in America, what happens in China, what happens in Europe will have an impact on Indian investment as well. So an investment advisor should be able to understand the macroeconomy as well and its impact on the investment portfolio.
So it's almost like that we know how to lose weight, but we are not self-motivated. We know what all things needs to be done so that, we are on our health journey. But where self-motivation lacks, it is the perfect time to bring in an expert so that coach can help us to achieve our goals.
Definitely. I mean, having an investment advisor who is aligned with you, who is a fee-based advisor, who empathizes with you, who also, not just understands about, reads always about investment, but also reads different aspects, different, topics, which would have some way, connect to the investment.
So investor psychology, as you have
To
mentioned.
understand the investment psychology, it really helps to understand their professional background, to understand where they're coming from, and what are their fears and what are their dreams, what ticks with them, to be able to understand and design a portfolio which is representing the personality of the client. That is very important. Additionally, an investment advisor should also be able to understand the valuation of different sectors, different economies, different stocks, because that helps identifying the portfolio, identifying the right fund manager to represent the portfolio, and also to be able to spot opportunities in the market.
Wrapping up our discussion here, what are the practical daily habits that investors can inculcate so that they can manage uncertainty and control their emotions?
First, again, one has to be disciplined. Second, you should be meditating or doing something like meditation,
Which calms your mind.
which calms your mind, which calms your nerves. Then, third, if you cannot manage your portfolio on your own and want better outcome from your investment, hire a good professional, unbiased investment advisor who you can rely upon, because it's a partnership that you do for long term, which helps you meet your goals comfortably. Lastly, as I said, ignore noise. Do not read or listen to a lot of crap.
Sometimes it becomes very tricky, especially when different faces come, let's say on television, on social media, and they're saying the same thing. So the other person really gets confused at the time when you're doing something else. So you are not investing in new fund offers, you're not investing in IPOs, you're not investing in, let's say, mid or small cap, and you are truly and truly focused in building your wealth via large cap value oriented fund. But then you see so many experts who are coming and they are talking something different. So here I believe it is very, very critical to completely, shun off yourself and believe in the investment strategy that you have developed for yourself at the first place.
Certainly, and that also helps by having a circle of such people around you.
Correct.
Who are not having volatility in their emotions, who also are more sane, and who have good experience and understanding of investment management, and who understand valuation also very well. So they can remain calm and also guide you well, what needs to be done. So having this circle, and of course, having an investment advisor who you can trust, listening to that investment advisor who can manage your emotions well, is very important. And that's, I think, the best way to get on an investment journey for successful outcome.
So, concluding everything here, to manage the uncertainty in the stock market world, we can have a quantitative tool like an asset allocation framework that will help you to reduce volatility because you have invested very well in the right proportions in equity, debt, and gold. Secondly, you have to reduce the volatility in your mind. And that can be done by these other qualitative aspects that we have discussed, be it the discipline part, the meditation part, avoiding TV, avoiding the other noise, etc. And also seek help from a professional advisor as and when it is required. Thank you so much, Sumit, for all these wonderful insights. And it's a wrap for our episode 4. Thank you.